Hey everyone, welcome to your Algo Lab. In our last episode, we explored optimizing long-term resampled TRIX strategies using grid search. If you haven't seen it yet, we highly recommend checking it out. The links to the previous episodes are in the description below. Today, we're going to backtest the same strategy across all asset classes. If you like our channel, make sure to like, subscribe, and hit the bell icon. Without further ado, let's get started. For each asset class, we'll present the backtesting results in 3 steps: return, risk, and risk-adjusted return. Let's begin with our fixed income asset class. We focus on the 10-year government bond prices, excluding coupon income to avoid distorting the moving average calculations. We cover bonds from the US, Canada, Germany, France, Italy, UK, Japan, and Australia. Regarding absolute return, long-term resampled TRIX do not perform well on bond prices. Only 3% of the strategies outperformed the benchmark. This is partly due to the extended period of decreasing interest rates, which has created a prolonged bull market with no significant bear markets. Consequently, the retracements are minor and can be seen as mere pullbacks within the bull market. This results in numerous false signals when bond prices pull back and then revert to the bullish trend. In terms of risk, the TRIX strategies successfully reduced the maximum drawdown, with 88% outperforming the benchmark. Turning to risk-adjusted returns, we observed that 60% of the strategies outperformed the buy and hold benchmark. This marks an improvement compared to the 53% outperformance seen with long-term resampled moving averages. Shifting our focus to commodities, we've decided to use spot commodity prices. This approach is analogous to using stock index prices without accounting for dividends or bond prices without coupons. While the actual investment returns will differ, we'll delve into those details in future episodes. For now, our primary focus is on analyzing the long-term trends of commodities and to avoid any distortion in our calculations. We classified commodities into several categories based on their distinct price behaviors. Agricultural commodities include sugar, soybeans, corn, and wheat. Industrial metals encompass copper and aluminum. Precious metals comprise gold and silver. Petroleum commodities include Brent crude oil, gasoline, and heating oil. Let's start with returns. 25% of the TRIX strategies outperformed in agricultural commodities, with the outperformance mostly clustered around the 2-month TRIX. For industrial metals, 60% of the strategies outperformed, with similar clustering near the 2-month TRIX. In precious metals, 60% of the strategies outperformed. This is by far the best strategy on precious metals. In petroleum products, however, only 15% outperformed. Turning to the risk aspect, we observe an overall reduction, though it is not particularly significant. When looking at risk-adjusted returns, industrial and precious metals show overall better risk-adjusted return. However, agricultural and petroleum commodities have an outperformance rate of less than 50%. For Forex and cryptocurrencies, each currency is treated as an asset. The US dollar value is represented by the dollar index, along with all major currency pairs against the dollar. Similar to other asset classes, we are using spot prices here. While roll costs do affect currency holding returns, we will take care of those details in future analyses. In today's video, we focus on long-term trends using spot prices. As usual, we'll begin with absolute returns. We observe an overall outperformance compared to the buy and hold benchmark strategy. For cryptocurrencies, the improvement over our benchmark is also significant across all parameters, with the 2-month TRIX delivering the best performance. Next, we examine risk, noting an overall improvement across nearly all currency pairs and cryptocurrencies. Examining risk-adjusted returns, we see notable improvements across Forex pairs and cryptocurrencies. Let's wrap it up. In the past 3 episodes, we have backtested the long-term resampled TRIX strategy and performed grid search optimization across nearly all asset classes. Here are some key takeaways from our findings, highlighting the averages for each asset class. In terms of absolute returns, the TRIX outperformed the benchmark in 15 out of 40 cases, or 38%. This is slightly less than the 40% outperformance with the resampled moving average strategy. Regarding risk, the TRIX outperformed in 37 out of 40 cases, or 93%, which is equally well as the resampled moving average strategy. For risk-adjusted returns, 26 out of 40 strategies, or 65%, outperformed the benchmark, which is only slightly below the 68% outperformance achieved by the resampled moving average strategy. The resampled TRIX strategy demonstrates improvements in risk-adjusted returns across equity indices, fixed income, industrial metals, forex, and cryptocurrencies. We believe the resampled moving average strategy is ready for deployment. Don't forget to check out our other videos. If you enjoy our content, please like, subscribe, and hit the bell icon to stay updated with our latest releases. Thank you for watching and see you next time.